Hello, good morning, everyone. My name is Rajat. I head the retail investments here at Lending Club. And on this webinar, when we understand all about risk in P2P lending, I have Nirmal with me, Nirmal Rewaria. Hi, Nirmal. Quick introduction. Nirmal is the chief business officer at Lending Club. He heads the channel partner investments for us. And we'll all talk about the kind of risks that are there in P2P lending and how you can mitigate those risks, right? So Nirmal, over to you.
Thank you very much. I'll just share my screen.
Yeah. While Nirmal sets this up, at the end of the session, we'll also have a Q&A. So in case if you have any queries in between, please drop it in the Q&A section. We'll enable it in some time. Thank you so much.
Rajat, my screen is visible?
Yes, Nirmal.
Yeah. Thank you all the participants. Thanks for joining us today. So I'll talk more about P2P concept and risk associated with that itself. So Lending Club is India's largest P2P lending platform. Investors come on this platform to earn up to 12% of interest rate itself. So peer-to-peer lending, since the inception of our society, this concept is going on. We all must have lent money to someone, relatives, friends, whenever they needed the funds and all that. Or in life, we might have also got some sort of help from our friends and relatives. So this concept is going on in various states. Its name is different itself. Like in Rajasthan, Gujarat, Maharashtra, it is called Byaj Ka Dhanda. In Gujarat, it is called Sahukari Ka Dhanda. In Haryana, it is called Adat Ka Dhanda. So this concept is not new itself. It's going on, and end of the day, if something is going on, and when RBI is quite concerned about that, so that in 2017, RBI regulated that business itself. I'll just give brief background. In India, P2P lending digitally was started happening in 2014. In 2016, when this market was over around 100 crores, then RBI came into picture. They had concern that this industry is going on, there might be accidents. So in 2016, RBI came up with white paper. They gave their opinion in the white paper, and they invited suggestions from public at large that what is your opinion. And once they got suggestions from public at large, after 1 year, in 2017, RBI regulated this industry, and RBI told that whosoever would like to do P2P lending business, they have to take license, and that license name is called NBFC P2P. We all must have heard about NBFC, but for P2P lending business, the entity has to take license, and that license name is NBFC P2P. Till now, RBI has issued almost 22 licenses. So whenever some company takes that license, the company has to come up with digital platform. And in that digital platform, whatever regulations RBI has defined for P2P lending, all those regulations should be in that platform itself. I'll give you examples. When RBI came up with regulations, RBI told that one investor's money should go to minimum 20 borrowers and all that. So RBI had 70 years of experience, and they see lots of accident. And to avoid further accident, RBI was quite stringent by defining rules and regulations for NBFC P2P or P2P lending business itself. So when someone launches that P2P lending platform, they start inviting lenders or investors. So those who understand the risk, if they need 3 to 4% returns extra, they come on this platform. And on the other side, this platform also start inviting borrowers. But these borrowers need to be eligible borrowers. Once lenders and borrowers come on this platform, as per regulations, what is the work of the platform? They start matching lenders with the borrowers itself. So in this way, the P2P business starts doing digitally after the regulations came in 2017, and RBI regulated this industry in a stringent way itself. Now, if something is new, always there is a doubt in investors' mind that this is new thing, whether my money is safe or not. And definitely, end of the day, being investor, we might have seen accidents and all that. So this question is obvious. So for this concept, I would like to come up with what sort of risk this product is having, and how do platforms mitigate the risk, and where is the RBI comes into picture to mitigate the risk and to safeguard the investors' money itself. So before coming on risk on P2P, let us first understand about mutual fund industry. Have we seen in last 40 years, like mutual fund industry privatization, first private mutual fund came into picture in 1995, almost 40 years of experience. Have we seen any AMC or fund manager running away with investors' money? In last 40 years, we have not seen such accidents. So first of all, let us understand the mutual fund structure. In mutual fund, generally there is a sponsor, like I'll just give an example. HDFC mutual fund started by HDFC Bank. So HDFC Bank was a sponsor. Then there is a trustee. HDFC Trustee Company Limited is the trustee for HDFC mutual fund. And then one is AMC, Asset Management Company, which manages funds of the investors itself. In last 40 years, no AMC has run away with investors' money. And the basic reason was that ownership of mutual fund lies with the trust. I'll just repeat, ownership of mutual fund lies with the trust, and that is the only reason that no AMC or fund manager has run away in last 40 years with investors' money itself. One of the example is that in 2012, Fidelity Mutual Fund, they wanted to exit from India. They sold the business to L&T Finance. L&T Finance bought in 2012. In 2022, L&T wanted to exit from business and they sold to HSBC. When Fidelity sold this business, the AUM was 8,800 crores. And now AUM is 78,000 crores. AUM means asset under management. When Fidelity sold this, they were managing investors almost 9,000 crores of money. And today, HSBC, when they bought from L&T Finance, they are managing almost 78,000 crores of money of investors itself. One of the scheme of Fidelity when they sold, it was ELS scheme. Its NAV was almost 22 rupees, and today it is almost 92 rupees. Almost 4 times of returns investors have got since the Fidelity sold to L&T and L&T sold to HSBC. So this is the basic structure of mutual fund, which got adopted by RBI in 2017 when they came up with regulations for P2P NBFC. So when RBI defined these regulations for P2P lending platforms, the first and foremost fear of RBI was that what if platform will run away with investors' money? So on day one in regulations, RBI told that no P2P lending platform should touch investors or lenders' money. Lenders means investors. So I might repeat lenders, investors. You should not get confused. Lenders means investor. So RBI told that no P2P lending platform should touch either investors or lenders' money as well as borrowers' money itself. And they adopted the trust structure what SEBI adopted for mutual fund. So in case of Lending Club, the trustee company is ICICI Bank trustee. We match one lender with the borrower. The lending amount goes to escrow account, which is managed by ICICI Bank trustee. Then from this escrow account, money goes to borrowers. So when the RBI told that one investor's money goes to 20 borrowers, at Lending Club, we divide that money among thousands of borrowers. I will cover up later on. But that lending amount goes through escrow account to borrowers itself. When borrower pay EMI, again the EMI comes to escrow account, and from this escrow account, the principal and interest goes to lender itself. So the way we have not seen any accident in mutual fund industry that no fund manager and AMC, no such entity has run away with investors' money. In the same way, RBI took that concept from there itself and they adopted the same concept. And from day one, they decided that no P2P lending platform should touch investors as well as borrowers' money. So the first and foremost risk that has been mitigated by risk by RBI by defining the regulations itself. Before moving ahead, I would like to show the regulations and the structure itself. So Rajat, my screen is visible now?
Yes, it is visible.
So this is the regulation document. RBI came up with regulation in 2017. I'll just go on page number 15. That will boost your confidence that to what extent RBI was quite serious about this risk itself. So this is the structure. This is, in case someone want, they can request for the regulation document on page number 15. Like on top, platform is there, like P2P lending platform, like Lending Club. On your right hand side, lender is there, and on left hand side, borrower is there. At bottom, you might be seeing trust. And the amount goes from the lender's amount goes in escrow account. In the center, you must be seeing escrow account block itself. From escrow account, it goes to borrower. Borrower's EMI comes to escrow account, and from where it goes to lender's account itself. The platform at top, the platform is having only viewing facility. The escrow account is operated by trust. In our case, the trust is ICICI Bank Trust itself. So the first and foremost risk has been avoided by RBI by defining in policy document. I would request you should always demand for this document, go through that. It will boost your confidence itself. Now, again, I am shifting from this document to my PPT itself. Rajat, the screen is visible?
Yes.
So that was the first risk. The second risk is that what if borrowers won't pay money? Like there is general tendency that on P2P lending platforms, anybody will come, they will borrow the money, and if they won't pay, my money might go away and all that. But it is not like that. Again, it is P2P lending platform's responsibility. Whenever some borrower comes on this platform, they define various risk mitigation parameters. At Lending Club, we have defined 4 risk mitigating parameters. Like when RBI came up with P2P lending concept, in 2017, they launched the concept paper. In that, RBI clearly defined that even though in last 70 years, I have opened up thousands of branches even in villages, but still I am unable to provide credit to those small entrepreneurs. Those really need the credit itself. And RBI mentioned in that when those small entrepreneurs, they need money, they have to go to money lenders, and their money lenders charge huge interest rate, and their risk mechanism, the recovery mechanism parameter is also quite strict and all that. So in concept paper, RBI came up with the thought process that P2P lending industry will help those small entrepreneurs to get credit. And once those small entrepreneurs will get credit, overall economy will grow. That was the basic thought process. And that's why at Lending Club platform, we believe in giving micro loans. The second is evaluation of borrowers. Whosoever come on this platform, we check various parameters. I will cover one by one. Third one is you must be seeing on at bottom of this screen. The third one is diversification among borrowers. The way in mutual fund industry, the fund manager diversify your portfolio in the same way. We believe in diversification. and your money goes to various borrowers. Again, I will cover up this topic itself. And last part is diversification among various lending products. So we have defined various lending products. Each lending product, it has its own risk mitigation parameter. And the first three parameters, micro loans, evaluation of borrowers, and diversification among borrowers, all these three parameters, they apply on each and every product itself. Now I will cover one by one. First is micro loan. At Lending Club, we believe in that loan size is small and tenure is small, it is less risky. So on an average, on our platform, the average loan size is less than 60,000 rupees and average loan tenure is less than 6 months itself. Generally, what we have seen that the small people, for them, जो उनकी जो asset होती है, उनकी इज्जत होती है, generally for a small amount, that borrower will not run away by leaving his family, the shop and all that. In case they get higher loan size, suppose 10 lakhs, 15 lakhs and all that, chances are more that they might run away. So we believe that in case we provide a smaller loan of a smaller tenure, then it is less risky. And at the end of the day, if it goes to merchant, then it will help the economy to grow itself, which was the thought process of RBI when they came up with P2P lending regulations. The second part is evaluation of borrowers. So when someone comes on our platform, we check almost 600 data points, and once someone crosses all those data points, then he becomes eligible borrowers. So what sort of data points we check? Income assessment we do. Under income assessment, we do salary verification, transactional checks, risk assessment by seeing his credit report, leverage checks we do, KYC assessment. Then there are various levels of checks, like we read his SMS of last 3 to 6 months itself, whether some message is there of default and all that. Email parsing is there, geolocation. Whenever some merchant come, we just check whether this merchant is moving or stable itself. Demographic details we check. Then at level 2, we check his repayment history, his various loans, and then bank statement. We take bank statement directly from his banks through, we have API integration with various account aggregators. So we don't allow the borrower to upload his bank statement. We directly take from various banks and all that by taking his permission itself. So on P2P lending platform, it doesn't mean that whosoever will come on this platform, he will get loan. Just to give you data points, in last 8 years of history of Lending Club, almost 70 lakhs borrowers have come. They have applied for loan, but only around 20 lakhs borrowers have got the loan itself. So almost on our platform, because of this reason, 2/3 borrowers gets rejected. This is overall last 8 years of history. Now, third point, which is quite important, and it is our USP at Lending Club, is diversification among borrowers. So when someone comes on our platform, we distribute his money to n number of borrowers itself. Just to give one example, in case someone come on the platform for 1 lakh of investment, his 1 lakh goes to almost 10 to 12,000 borrowers itself. What does it mean? I just repeat, in case someone comes with 1 lakh rupee, that 1 lakh rupee goes to almost 10 to 12,000 borrowers. What does it mean? On an average, your 4 rupees going to one borrower itself. So this is a lending business. In lending business, definitely NPAs will happen. But because of risk mitigation parameters, because of AI/ML, we have defined such a system that we ensure that you should not lose your principal. And whatever we are telling that in 1 year, you will get up to 11% returns, we should be able to generate those returns. So this is our specialty. In last 8 years, we have developed the technology so that we can diversify your investment among n number of borrowers. Just to update you, we diversify your investment up to 1 rupee extent. So somewhere 1 rupee go to some borrower, somewhere 3 rupees, 50 rupees, 99 rupees and all that. In this way, we mitigate the risk of the lender itself. Now, fourth point is that diversification among lending products. So we have various products like early wage access, merchant loan. These two loans we do through our B2B partners. We have various B2B partners I will cover up. And personal loan is our B2C product where we have our mobile app, Insta app. Anybody can come on that app and they can start getting loan itself in case they cross all those parameters and all that. So these are our partners. We have tie-up with almost 15 fintech companies, which has millions of consumers, because at the end of the day, on our system, because of 600 parameters, lots of borrowers get rejected. So we have a strong tie-up with these companies. So I just give two examples, which will again boost your confidence how each and every product has its own risk mitigation parameter over and above microloans, 600 parameters, and diversification. So I am covering here merchant loan. So in case some merchant comes to us directly, we don't entertain them. In case they come through our fintech partners like PhonePe, BharatPe, GPay, and all that, then we entertain them, because through these partners we get their various data like what is the daily sales, duration of business, कितने साल से धंधा कर रहा है, उनका QR कोड के थ्रू कितना पैसा डेली की कितनी इनकम होती है, whether his income is regular or seasonal, whether income is happening in daytime or during night time, and all that. And number of data checks we do through our B2B partners, and based on that, once that merchant is crosses all those 600 parameters, we decide whether merchant is eligible for loan or not. In case merchant gets loan, now please I request everybody to hear it out very cautiously. In case some merchant gets loan, there might be default chances that he might not pay EMI after 1 month, because he is not a salaried guy. So merchant might not pay EMI after 1 month. So to mitigate that risk, what we have done, we started charging, at bottom you must be seeing equated daily installment. So whenever we buy something through QR code from some merchant, that money first goes to that PhonePe, BharatPe, and all that. And by evening or next day, then money comes to the merchant account itself. So this is the business model of all these fintech companies, that first whenever we buy something, the money goes to PhonePe, BharatPe, and then if they have some commission, they cut it, and then by evening money goes to merchant. So once we have such tie-up on daily basis, first amount comes to us in the form of equated daily installment. Suppose EMI was 3,000 rupees for that merchant, then on daily basis 100 rupees comes to us first, and that balance amount goes to merchant itself. So this is inbuilt risk mitigation parameter in the product over and above those three parameters: micro loans, 600 parameters, and diversification. Again, one interesting product we have, early wage access. We all must have heard about Amazon delivery boys, but delivery boys are like they are on the payroll of some delivery companies in between. At month end, the delivery companies raise invoice on Amazon that on your behalf we have done 1 lakh deliveries in last month itself, and that amount is due, please pay us. Amazon takes its own time, 10-15 days and all that, but this delivery boy is poor boy, he needs salary on 1st of every month. So what we have done tie-up with this entire unit itself. So when this delivery company in between, they raise invoice to on Amazon, Lending Club release the salary to this delivery boy. When Amazon will release payment after 10-15 days, the payment will come to us. So again, this is one of the risk mitigation parameter inbuilt in the product over and above microloans, 600 parameters, dividing your money among thousands of borrowers so that your principal can be safe. And what we are telling that we will be able to give you up to 11% returns, we should be able to deliver that. So I wanted to cover these risk mitigation parameters. Now I open the floor for Q&A.
Thank you, Nirmal. That was very informative. We do have a couple of questions. I will quickly start reading out. The first question is, can we share some insights on the tax implication for lenders, investors?
So here, when lender get interest, they know TDS in that, and the income will be treated as a income from other sources.
Okay.
So whatever bracket the investor comes in, that bracket income will be charged and taxable.
Got it. Perfect. The second question that I have is, uh, what future regulatory changes do you anticipate in the P2P lending space, and how might these impact risk management strategies?
This is very important. If someone asks that, we should clap for him or her itself. So of late, like RBI work as a friendly manner, like RBI is not like SEBI, where SEBI gives clear instruction and all that. RBI gives indications. So of late, RBI had shown some sort of concern, and we always proud for that. Like in industry, some liquid plans are going on, and some when RBI came to know about that, RBI visited all the P2P lending platforms, and RBI had short concern that I will not allow secondary sales. So generally, all P2P lending platforms, they have been managing liquid plans by using secondary sales, where when someone comes for asking his own money, then that portfolio they sell to some other investor, and in this way they are managing liquidity. But at Lending Club, we are the only platform, and we are proud to say that we are the only platform across the country which does not have liquid plan, because end of the day, this is not good for investor, and this is not accepted by regulatory or RBI itself. So this is the main concern RBI has shown in last 3-4 months itself, and RBI is quite strict on that. And we are the only platform where we always feel proud. एक नींद अच्छी आनी चाहिए. When we deal with public money, we always believe that इन्वेस्टर को भी नींद अच्छी आनी चाहिए और हमें भी नींद अच्छी आनी चाहिए, भले हम लोग स्लो ग्रो करेंगे. Even though we don't have liquid plan, we are the largest P2P lending platform which caters almost more than 50% market share. So हम लोग वैसा ही काम करेंगे जो इन्वेस्टर के हित में हो, और इससे इन्वेस्टर को नींद अच्छी आए और हमें भी अच्छी आए.
Absolutely. Okay, there are a few more questions. One is, what is the current NPA on lending platform?
So current NPA is in the range of 2.5 to 3%. I'll just give one perspective. In COVID time, that was the worst period where government intervention was there. The NPA at that time was 5.9%. And since then, it has been coming down. So right now, it is in the range of 2.5 to 3%. Being like, I have almost 25 years of experience, and I come from mutual fund or insurance industry itself. When I started offering P2P lending on ground through various channels and all that, one thing, one sort of calculation I did, that what if again COVID comes? So if COVID even comes and even NPA grows till 6%, we would be able to generate almost 11% return still. So that sort of calculation we have done, that even if COVID comes, even if NPA grows by 6%, we would be able to comfortably generate 11% returns. But right now, what we are telling them, up to 11%. So that sort of comfort we should have, that COVID वापिस आ गया तो क्या होगा and all that. So it is quite 2.5 to 3% is quite less NPA if we compare about banking industry and all that. For PL, it is in the range of 3 to 6%.
Right. The next question is also very relevant to this. How investors will be affected if multiple borrowers become defaulters?
So this is quite technical, like RBI is sitting on our heads. Every month we have to share our NPA data, and RBI also comes regularly for inspection and all that. Moment NPA will grow up and all that, there will be some sort of concern shown by RBI. And end of the day, like again, I'm repeating the same thing, that we have diversified your investment in such a way that even if one set of borrower they default, there won't be impact on principal and interest itself. So, and that's why we invested heavily in technology. It's very easy to say that हम लोग ₹1 तक का डाइवर्सिफिकेशन करते हैं, लेकिन इसको मैनेज करना बहुत मुश्किल होता है, और इसके लिए टेक्नोलॉजी में बहुत इन्वेस्टमेंट होता है. एंड ऑफ द डे हमारा ऑब्जेक्टिव क्या है कि आपका पैसा डूबे नहीं, and whatever we are telling that we will generate up to 11% returns, we should be able to generate that. So it's very rare that all the borrowers will default, because end of the day, when some fund manager in AMC, he invest your money, he diversify your investment, because हर sector एक समय perform नहीं करेंगे और हर sector एक समय नीचे नहीं जाएंगे. And because of that rule, we believe that even if one set of borrowers will default, there won't be much impact on your principal, and we would be able to give you up to 11% returns in 1 year.
Right. Okay. Another question, again, in the very similar lines. So what percentage do we expect loss of principal? It is unlikely to safeguard 100% as there are no collaterals.
Very good. Jabardast question है. तो ऑलमोस्ट 3-4 months when I was sleeping, मैं करवटे बदल रहा था कि यार मैं एक ऐसा प्रोडक्ट बेच रहा हूँ तो कभी कुछ हो गया तो क्या होगा. I talk like a general person itself. मैं भी एक इन्वेस्टर की तरह सोचता हूँ. So मैंने नेक्स्ट डे आके कैलकुलेशन किया एज ए लेमैन, लाइक ऑन एक्सेल शीट एनीबडी कैन डू दैट कैलकुलेशन एंड ऑल दैट. So in COVID, the NPA was 6%. That was the worst situation. When I did one simple calculation on Excel sheet, at 16% of NPA, again I repeat, 16% of NPA, the investor will start losing his principal, which is quite impossible. हम सब ने एकदम बुरा वक्त देखा है, उससे बुरा वक्त नहीं आएगा. कोविड का उसमें 6% था, 16% तो होने का चांस ही नहीं है. So I whenever I go on ground, I always request people that you should wise enough एक छोटा सा risk लेके if you can generate 3 to 4% returns, then it is good. So 16% तो होने वाले नहीं है. It is quite impossible. You should not worry about your principal loss itself. On lending platform, nobody has lost principal in the last 8 years.
Okay. Based on which factors 11% rate is fixed, why can't I get more than that?
Very good, very good. So as per RBI regulations, like RBI, whenever they come for inspection, they just checks data that these are the three investors. Please show me the overall calculation of that, where his money has gone and how, when money has come, how it has gone to lender back and all that. So for each and every investor, there is separate portfolio itself. And that portfolio, we ensure that at company level, each and every investor's portfolio should be matched itself, because we have done some calculation through AI/ML. यदि हम लोग कुछ डाइवर्सिफाई करके कुछ रिटर्न जनरेट कर पा रहे हैं, तो हर इन्वेस्टर का पोर्टफोलियो लगभग वैसा ही बनना चाहिए. तो इन दिस वे वी एंश्योर दैट इन्वेस्टर को जो हमारा जो कैलकुलेशन है थ्रू AI/ML कि हम लोग अप टू 11% जनरेट कर पाएंगे, उतना जनरेट कर पाए, वैसा है. तो हमारे लिए हर इन्वेस्टर, भले वो 500 रुपए इन्वेस्ट करे, 10,000 करे, चाहे 50 लाख करे, हमारे लिए हर इन्वेस्टर समान है. और उसका जो उसका कॉम्बिनेशन है वो इसी तरह से डिफाइन करते हैं जो कि हमारे कंपनी लेवल पे होता है, वैसा है.
Correct. Okay. Understood about, so there's another question which says understood about EDI in case of merchant loans, but what about in case of personal loans? Because there you don't have the option to do EDIs. So what happens there? How do you handle NPAs?
Good. So this is good question. Like in case of personal loan, again, the way I told that each and every product, it has its own risk mitigation parameter. In personal loan also, we have defined risk mitigation parameters. In personal loan, we give loan up to 15,000 only, and we give to only salaried people, and only when they cross those parameters which we have defined. So because of that, our NPA are limited, even though we don't, because end of the day in merchant loan, we are not sure that merchant will pay EMI after 1 month. Here, he is a salaried guy. We check through his bank statement, all that he has been earning, and salary is coming on so and so date. So because of that, there is no meaning of deducting EDI, because salaried guy, he does not have some daily income and all that. So there are, in case we use EDI, default chances are more than merchant itself. So because we know that he will get salary on such and such date, so accordingly we define the EMI wala concept itself.
Correct. Okay. The next question is, you mentioned that only a portion of the borrowers who comes and applies for a loan gets the loan approved and disbursed, right? What happens to the rest of the borrowers that we reject? Is there a possibility that those can be given to the lender to select with the understanding of high risk and high return?
So on our platform, manual lending, first of all, again, we are very much clear that only those will be eligible borrowers who will clear our 600 parameters and all that. Now on our platform, we have manual lending option also available. So in case someone wants to take higher risk, then they can select their own borrowers. But one thing is clear, whether you choose lending, manual lending or the FMPP product, the borrowers filter will be same. The first check will be there because end of the day, हमें भी आपके पैसे की चिंता है. नहीं चाहेंगे कि आप किसी भी जो बोरोवर बिल्कुल ही चांसेस आर मोर फॉर डिफॉल्ट, वो बोरोवर आपको हम लोग नहीं देंगे, बिकॉज हमें पता है कि आपने बहुत मेहनत करके पैसा कमाया.
Correct. Okay, we have 4 more minutes, so let's take a couple of more because there are way too many questions for us to cover. Okay, the next question is: Are you saying that P2P lending companies can't be closed? It can only be merged or acquired by another company?
This is a new industry. I won't comment that what will happen because no such case has come. But if we see there should be some benchmark, there should be some comparison in the same industry itself, financial services industry. We have seen AMCs exiting from the business and they have sold to some other AMC itself because regulator was there. In the same way, we should have comfort of RBI that if RBI is helping the P2P lending industry, because RBI sees that this industry will help economy to grow. So in case some P2P lending platform would like to exit, definitely RBI will intervene, and there might be chances that some other lending P2P lending platform or some other business houses, they might buy that business. But even if nobody will come into picture, your money is safe because the money lies with the trust escrow account and the transaction will keep on continuing. So you should not have that fear that what happen in case P2P lending platform will exit and all that. So that fear you should not have because from day one, RBI defines certain rules that your money is safe.
And ESCO takes care of that for the P2P lending platforms. Okay. The next question is the quoted percentage earning is annualized. That's first question of the part. Second question is, and is the quoted percentage earning post or pre-tax? Please share an example to help us understand the net earning after tax.
So what I'm telling, up to 11%, it is annualized for 1 year itself. For 2 year, it is 11 up to 11.25. For 3 year, up to again. Pardon me, because the way SEBI has given disclaimers for mutual fund, even for liquid fund, all AMCs, they have to give disclaimer that investment is subject to market risk. In the same way, RBI has given disclaimer to us, and that's why we use the word up to. For 3 years, up to 11.5%. For 4 years, up to 11.75%, and for 5 years, up to 12% itself. So it is annualized returns. And again, it will be taxable as per your income bracket itself. There won't be TDS. I'll again repeat, there won't be any TDS. It will be taxed when you will file returns. It will be taxed as per your bracket itself.
Correct. Okay. Let's take this question. When we do the investment, what is the proof we need to collect from the P2P company?
I didn't get this. Can you repeat, please?
Yes. When any investor makes an investment, what proof they should take from the P2P lending platform that the investment has been done?
Very good. So first of all, when you do an investment, you can download our mobile app, and you will come to know that in what tenure you have invested and where your money has gone and all that. So we work on transparency basis. So we are the most transparent organization where suppose you come up with 50,000 1 lakh investment, you will come to know through this mobile app that where all your money has gone. You will come to know 10 to 12,000 borrowers and all that. What is the borrower name, profile and all that. Over and above, you will also get one certificate of investment. You can download that, you can keep in file because अब इंडिया में अभी भी वो एक अपना mindset है कि मैंने कुछ investment किया था, मेरे पास कुछ proof होना चाहिए. So people download that receipt itself, and I right now I don't know whether I would have shown it. So that receipt clearly tells that कि लेन-देन क्लब, लाइसेंस नंबर, RBI regulated, आपने कितना इन्वेस्टमेंट किया, अकाउंट नंबर क्या है, कितने टेन्योर के लिए किया and all that. So that receipt itself you can download to take printout and keep in file itself. It will give you comfort because end of the day कभी मोबाइल खो जाता है तो उसमें भी कोई चिंता की बात नहीं, आप दूसरा मोबाइल लेके डाउनलोड करेंगे तो आपको अपना पोर्टफोलियो दिखेगा. बट इवन इफ समवन इज नॉट कंफर्टेबल डिजिटली, they can download the receipt and keep in file itself. That will give you comfort.
So we're out of time. Let's take one last question. Is this platform open?
अच्छा, कठिन वाला सवाल आना चाहिए.
Is this platform open for NRIs?
Yes, definitely. Like just for your information, on an average monthly almost 15-20 NRIs invest because end of the day this gives 3 to 4% extra return than traditional product. So बाहर बैठ के भी लोगों को पता है. अब इंडिया में लोगों को जो इंडिया में रह रहे हैं उनको डर लगता है, उनको इतना पता नहीं है. लेकिन आप देख लो वो बाहर बैठे हैं तो कितने नॉलेजेबल है, कैसे वो छोटा सा रिस्क लेके रिटर्न बना रहे हैं. I would urge all Indian people also to understand the product and at least start diversifying their portfolio into P2P lending.
Correct. Do we take one last one?
Please. मैं तो open हूँ.
Okay. This is how do we select the right P2P lending platform to invest? How do we know it's reliable and trustworthy?
This is very good product because end of the day आपको 4-5 चीजें देखने चाहिए कि सबसे पहले कि इनको एक्सपीरियंस कितना है, कितने साल से काम कर रहे हैं. दूसरा, इनके फाउंडर्स का बैकग्राउंड क्या है. Third and foremost part is that whether this company is having senior management team or not. So just to update you, and fourth one is whether the platform is profitable or not. यदि कोई प्लेटफॉर्म या मैन्युफैक्चरर यदि प्रॉफिटेबल नहीं है तो कभी भी दुकान बंद हो सकती है. तो सबसे पहले आपको देखना चाहिए कि प्रॉफिटेबल है नहीं है. अगेन वी आर प्राउड टू से दैट for last 3 years we are profitable organization. We are sitting on 100 crores of cash itself. We 30 crores of profit and 70 crores Series A funds we raised in 2 years back. Secondly, for last 2 years we have been building the senior leadership team itself because the way RBI is taking interest in this industry, we feel that now it's time to hire senior management team. Each and every member should have almost more than 20 years of experience. So in last 2 years, we have hired almost 12 senior leaders from the industry, and they have worked with big brands and all that. So 3-4 things we should see: profitable, promoter background, and end of the day, what sort of management team they are having.
Great, Nirmal, thank you so much. It was, it was really insightful, and we love taking the questions. I know, and there are many more questions that we could not answer today. But what we will do is we'll first share the video for sure, the recording with all of you. Besides that, any questions that got left out, we'll answer them over an email to you, or your RM will connect you and try to answer those for you. But thank you so much, everyone, for joining today. Thank you, Nirmal, once again.
Thank you very much. Thanks for this opportunity.
Thank you. Well, thank you so much, guys. We'll see you in the next webinar.